Okay, let's get started here. I'll stop this share for a second. Welcome, everybody. Thanks for joining. My name's Brad Steinberg. I'll get into my background in a bit more of my background, but I'm one of the co-president of PWS and co-owner of PWS, and been doing this for about 13 years. And this is our second official online laundromat boot camp that we've been having. We've been doing seminars like this, kind of one-off seminars for a long time, and sometimes in person, sometimes on webinars. But this is the second series that we've done where we've kind of put everything in a boot camp in a series, and it went really well. We finished the last one in December, and we had about 25 to 30 attendees. Two of those attendees have bought a laundromat already, and one of them is writing up an offer on a laundromat. So it's actually been a successful boot camp with others that are making offers, as well. So welcome to this. I'm really excited for this. I'll get into the schedule in a bit, and let me share my screen. Let me actually just kind of run over the rules of or kind of how this works best. I've muted most of you guys, but I would love a lively discussion. You guys have paid to be here. You've signed up. You've taken your guys' precious time to join this, and I would love to talk about, have a lively discussion during these presentations. So to unmute yourself, just press *6 if it's on your phone, or if you're on your computer, you can just unmute yourself. I've allowed you guys to do that. If for whatever reason there's background noise or whatever, I might mute everybody, but I'd love when we can get in a lively discussion. If you don't feel comfortable unmuting yourself and you want to type in a question, you can go for it. There's a chat feature, or if you want to raise your hand, and then I can kind of call on you. But this is a very informal type of boot camp, and it is for your guys' benefit. So if there's anything that I'm covering that you want to chat about, just interrupt me. If you want to talk about something that's a few slides beforehand, interrupt me. I really welcome a lively discussion. Each session will be about 45 minutes to an hour. This one will be a little bit longer maybe, because this is kind of the fundamentals of valuing a laundromat. This is, so it might run an hour, and then we can have questions and answers during the presentation and then also afterwards. Additionally, I want you guys to feel like you're a part of the family now. If you have questions, I'm available 24/7. So you want to email me, call, text, whatever you want to do, I'm available. Any questions on the laundromat business, I'm happy to answer. I love this business. I love helping people make money in this business. And so if you have any questions, thoughts, comments, anything you do, anything you have, feel free to give myself a call, or I have a team on here that I'm going to introduce in a second, and you can reach out to any of them as well. So feel free to interrupt anytime, and even not during these sessions. I'm going to say, once again, you're part of the PWS family now, and feel free to reach out at any time with any questions. There's no stupid question, and happy to answer anything. So I am now going to share my screen and go through a presentation today. This is basically how to value.
Now, overview of.
I'm sorry, what was the question? Oh, okay. So I'm just going to run through an overview of this boot camp, what to expect. So the goal of this is to prepare you to both purchase a laundromat and also understand the fundamentals of operating a laundromat. So it's kind of twofold. The sessions will be on Tuesdays and Thursdays. They'll be for the next 4 weeks, basically, so 8 sessions. Each session, as I said, will be about 45 to 60 minutes with time left over for as long as you want for questions and answers. I'm recording each session, and I will send you the recordings at the end of the week. So we'll do this one tonight. We'll do another one Thursday, and then on Friday or over the weekend, I'll send you the 2 recordings that we did for the week. Also, after this meeting, I will send you an invite, a calendar invite for the next webinar, which is Thursday at 4 p.m. All of the sessions are going to be at 4 p.m. Pacific time. And then if you have any questions, feel free to contact me or any of the presenters at any time. So who are going to be the presenters here? As I mentioned, I'm Brad Steinberg. I've been co-president of PWS since 2007. My family has been in the business for over 50 years. I'm 3rd generation here at PWS. So my grandfather started back in 1968, and then my father, and then I've been doing this for the last almost 14 years now. I'm the broker of record here at PWS, so all of the transactions, all the laundromat sales, they go through they go through me. And before this, I did some time as an investment banker. Courtney Satterley is he's our general manager of our Northern California operations. He's been with PWS for 19, possibly 20 years now. He owns 4 laundromats as well. He's going to give a great presentation on the actual operations of laundromat, how to handle employees, how to handle collections, how to getting really in the weeds of operations. And he's going to do that one coming up soon. Cindy Wolf, she's our Southern California sales manager. She's been with PWS for now 13 years. She's overseen the sale of over 100 laundromats and also is an owner of a laundromat herself. And then Anna Figueroa, she manages our San Diego office, and she's also our head of finance. She's been with us for 28 years, and she's helped finance over $250 million in equipment and what we call acquisition financing, which is people who want to acquire laundromats. The boot camp schedule, I won't go over each one in detail. You guys have all seen this, but essentially it's an 8-session schedule. We're starting tonight. And what I just will mention is the last, the March 19th, the second to last session. We're going to break out, for those of you who are in Northern California, is going to be one session. Southern California, or Los Angeles area, I should say, is another session, and San Diego is a separate session. And we're just going to go over actual laundromats for sale and go over one by one some of the listings that we have available. And then the last session, which is March 11th, or anytime you want, really anytime after March 9th. If you want to have an in-person meeting, I am sitting here in Southgate, California. We have a laundromat that's connected to our offices. In San Diego, same thing, a laundromat's connected to our offices. And in San Francisco or in the Bay Area, Courtney owns some laundromats. And we are happy to take you to a laundromat and actually walk you through the collection process, walk you through kind of how to program machines, show you the underbelly, kind of, so to speak, of stores. We can do that anytime. We can do that on the phone via a webinar, a one-on-one webinar, or if you want to come in person, if you're comfortable with that, we're happy to do that as well. So that's the last session. It's kind of more of a one-on-one kind of thing. About PWS real quickly, we are a full-service laundromat or commercial laundry distributor. So why most of you are here now, we sell existing laundromats. We have 20 agents. All they do all day long is focus on the listing and selling of laundromats in California. There's about 4,000 laundromats in California, and we are brokers of laundromats. We also build brand new laundromats and we sell them before they open. So we kind of sell them as turnkey operations. We've built about 3,000 laundromats in the company's history. So we know what we're doing on that front. We also are a distributor of a brand of laundry equipment called Speed Queen. There's a few different brands of commercial laundry equipment. Speed Queen has about a 45% market share in the laundromat segment across the country. There's about 35 to 40,000 laundromats across the country. And we are their largest distributor. We sell Speed Queen product in California and Nevada. And we also sell to hotels and motels and apartment houses and all that kind of thing. We do service. We have a dedicated service team that services washers and dryers. We have the largest parts department in the country, selling parts for all major manufacturers. And then we do financing. As I mentioned, Anna is our head of finance. We have a 3-person finance team, and all they do is help people who want to buy laundry equipment or laundromats actually get financing. We'll work with a few different lenders out there that can get you the best financing. And then we have about 100 employees, and we have 3 offices throughout California: Southgate, South San Francisco, and San Diego. Okay, so process for buying a laundromat, and also I'm going to get into valuing a laundromat. That's what this is going to be about. Okay, so key terms I just want to go over before we really start this. You have a purchase agreement. So, you know, those of you interested in buying a laundromat, which is obviously you guys on the call, you're going to make offers and counter offers, and maybe they don't go anywhere. Maybe they just you can't agree with a buyer on a price or terms. Once terms are agreed on, there is a purchase agreement that is drafted, similar to what you would find obviously in buying other businesses, you know, or properties or whatnot. There's going to be a purchase agreement. Once that purchase agreement is signed, an escrow is going to be opened. Here in California, we use escrows. Escrows are sort of a neutral third party that takes the terms of the purchase agreement, and they do what is directed from that purchase agreement. But you will open an escrow when you are buying a business, and so it goes offers, counter offers, offer and acceptance, then purchase agreement, then an escrow gets opened. Once an escrow gets opened, those of you, you still have a lot of time to do your due diligence. And we're going to talk about the different kinds of due diligence that you want to do before buying a laundromat. And you might have various contingencies that you want to put into a purchase agreement that will ultimately go into an escrow that will talk about you want to see certain things done first before you say, hey, I'm ready to buy this laundromat. You might say, I want a longer lease. You might say, I want to do a coin count. You might say, I want to review utilities. I want to review the lease document. All of these things are different contingencies that you're going to have in a deal. And at some point, the seller is going to say, hey, Mr. or Mrs. Buyer, I want to make sure I'm going to give you a certain amount of time, but at some point, you know, you're going to have to remove the contingencies and then go forward with the purchase. What is different about the purchase of a laundromat versus maybe a home is that you have a lot of time to be able to do your due diligence to see if it is something you want to do. So we are obviously in the business of transacting. We sell a lot of laundromats. We are brokers of a lot of laundromats. And sometimes if the only purchase maybe you've ever done is buying a house, and when you buy a house, they say, hey, you need to get an offer and acceptance, open escrow, and close within 10 days. You know, that's not uncommon in today's market. In a laundromat, you're really going to be able to put in an offer, get an offer and acceptance, make sure that everything is perfect before you close. And I just want to impress upon that. That's kind of the main thing I want to press upon on this, is that it doesn't move as quickly as you might, you know, with a home purchase or other kinds of real estate purchases. And then, you know, some of the typical contingencies that I mentioned: reviewing coin counts, reviewing of financials, approval of lease, financing, all that kind of good stuff. And then this is another term I want to describe, and it's a return on investment, or ROI. And essentially, it's your initial investment divided by the income, what some might be called the EBITDA, so your income before your income before taxes, depreciation, amortization, or any kind of interest payment. What the laundromat nets if you were to pay for it, cash. That is going to be what your ROI is. So I'm going to talk about this a bunch, and I'm going to run through this example slowly. And if anybody has any questions, obviously let me know. But if you buy a laundromat for $400,000 and you pay cash, and that laundromat is expected to net $100,000 a year. So after all your expenses, you're left with $100,000 a year. your ROI, your return on investment, would be 25%, and you would make your initial investment back in 4 years. All right. Now, if you were to add financing to that, if you were to add leverage to that, you could potentially have an ROI that becomes even better, because you're not actually putting $400,000 of cash down. Maybe you're putting $200,000 of cash down. And although you have an interest payment and a debt service payment associated with that, you may be able to make that back a little quicker. But this is how laundromats are sold. They're sold on a multiple of income. And so in this example, a laundromat that's netting $100,000, that someone pays $400,000 for, it is selling at a 4 times annual earnings. Some brokers might talk in terms of months. In some other businesses, you might talk in terms of revenue. Maybe a business is sold on a multiple of revenue. This business is sold on a multiple of net income. And in this example, a 4 times multiple is going to give you a 25% return on investment. I'm going to pause there for a second and see if anybody has any questions on any of these key terms before we move on. No questions? Okay. Okay, so looks like there's a question here. The question is, do you have to put money into escrow? It's a great question. You do have to put money into escrow. That money, based on the purchase agreement, is generally, if you're working with a broker, they're certainly going to have this in there. That money is refundable. That money is refundable if the contingencies are not met. If you don't want to move forward with the deal, essentially, you might have to pay some escrow fees depending on certain things. But for all intents and purposes, money is sent to open up an escrow, but that money is refundable if the buyer wants to not go forward with the deal. And is still in their rights to be able to do so. Like if they're still in their time period to do so, they haven't removed their contingencies. And how much should you put to open escrow? It depends. You know, a seller is they like more money in escrow just because it gives them more of a comfort. And a seller a buyer sometimes says, hey, I don't want to put a ton of money in escrow. So it's a negotiable dollar amount, how much money is put into escrow. Generally, $10,000 is kind of a standard that is satisfactory. Okay, good questions. Different types of laundromats that are available for sale. So you have what's called FSBOs, for sale by owners. I'm just starting in the upper left-hand corner here. And the characteristics of that will basically be the buyer has to do all their own investigations, right? A individual is just selling a laundromat on their own. Is financing available? Yes, but the options are limited. Basically, a lender is going to want to do their own analysis and just make sure everything, everything checks out. You have an existing store listed by a broker. That's sort of the second column here. The numbers should be vetted by an expert. Financing should definitely be available. And the newer the equipment, the better the financing options are. I'm going to talk about that in a later slide. And then the third option is a new store built by a laundromat developer. They are brand new stores. There's no track record on those stores, but you could have a high potential of what the stores could do. And there's really great financing for that because all of the equipment is brand new. Some of you may be on here saying, hey, I want to build a new laundromat. That's what I want to do. There's a vacant space next to where I live, and there's a bunch of apartments. I just want to say it's a very difficult, not impossible, but difficult and expensive venture to build your own laundromat from scratch. Most of the transactions that we do involve people wanting to buy existing laundromats, and those that want to build a brand new laundromat, people definitely do that, and we help with it all the time. Generally, it's for their second or third or fourth laundromat after someone's been in the business for a while. When you want to build a new laundromat, this is just a rule of thumb, and it could obviously vary, but you're looking at approximately 250 to 350,000 for every 1,000 square feet of that laundromat. And that includes equipment and plans and permits and construction and all that kind of stuff. But if you want to build a 3,000 square foot laundromat in a vacant space, anywhere in California, you're looking at 750, 800, 900, $1 million. It's that expensive. So really, really an expensive kind of thing. And you're going to need a landlord that's going to give you a long lease and a bunch of other stuff. So most people who enter the business enter so by buying an existing laundromat. The other thing that I'll say is I think PWS does a pretty good job. I think we know what we're doing as far as being a broker, assisting with the buying and selling of laundromats. My one request to those of you on this call are use a broker, whether it be us or somebody else. There's people in this business that this is what they do. They're brokers, and they sell, or list laundromats all the time. There's just these little nuances, and we're going to go over them, and we're going to give you a nice tutorial on them during these next few weeks. But using a broker who understands this business, it just helps you get to the finish line, and it helps you get like a clean deal. And at the end of the day, you as a buyer aren't paying, for the broker. The seller is paying for the broker, and it's just going to make sure that the deal is done in a smooth and kind of transparent manner. So I would just recommend that. There's a question here, so let me get to it, and then I'll move on. A question from Jack. It's a good question. Is the ROI based on the most current business income? So, like buying any business, you're going to want to look at the most recent income, and you're going to want to also normalize in case there's any one-time bumps or dips in the business. And with COVID, what's happened for most laundromats is there was a little dip. Some saw a little bit more than others, but there was a little dip on how the income, the performance of the laundromat has been. Now, coming into almost a year of COVID, some laundromats, we operate, as I mentioned, one next to our offices in LA and San Diego. They're basically where they were pre-COVID. I looked at numbers from April to December, comparing to the previous year, and they were down like 6%. So that is an issue as we look to, as sellers and buyers look to come to what is a normalized, income record. And what I like to see is, particularly during, I'll say this COVID time, give me 2 years of financials. I'd like to see 2 years of financials, and I'd like to see what was the laundromat doing the last year, and then what did it do in 2019. So the longer time period, the better, because you're gonna be able to see kind of see the trends a little bit over a longer time period, and be able to get a better view on things. Someone asked, what is the typical interest rate on loans for that was in purchasing laundromats? And it depends and it varies, but you're somewhere in the 6-7% range. The more new equipment you have, the better, and you can certainly bring that down a bit. But if you're just buying a traditional laundromat, no real estate included, you might be somewhere in the 6s. Let's just use that to be, kind of use that to be like kind of a place where you can put your head, and then it definitely can vary from there and can be a little bit lower as well. And then someone asked about COVID. So how far do you go back on the financials? And as I said, I think 2 years is the right amount of time. Okay, so the process for buying the laundromat, and I went over it kind of in key terms a bit, but there's a listing, and I'm going to show you what a listing looks like. But you have a listing, then you get offers, counter offers, you get an offer and acceptance, and then there's a due diligence done by the buyer. Then you open escrow, then contingencies removed, and then the store, you close an escrow and you actually take ownership of the store. So as I said before, there's a lot of time until you end up actually going what I would call hard on the deal, meaning you remove contingencies and your deposit becomes non-refundable. there's a heck of a lot of time in there. So go out there and make offers and see what happens and kind of just get rolling with this thing. And I say this all the time. I might say it a few times during this webinar series. People ask me all the time, hey, Brad, what do you think about that laundromat over there? And my answer is, you know, I hate it for 600,000, but I love it for 400,000. You know, like I'm just using it as an example. It depends on what the price you end up getting the store for matters. How maybe the landlord is going to give you an extension to the lease that makes the store incredible versus just being average. So there's a lot of factors that go into what makes a store, you know, right to purchase and what doesn't. And just know that you have a lot of time in this and you can throw out offers, see how sellers respond, and also, you know, sometimes ask for things that maybe take it from being a really good deal to a great deal. But if you're patient, you will find a laundromat that fits you. You just got to be patient. Couple questions, and then I'll move on to valuing a laundromat. Two questions that were just asked, and I'm going to get into them in this valuation section here. So, and if I don't get to them, you can definitely interrupt me. So, details of buying a laundromat. Here's what a buyer is going to need to consider. Most laundromats in California trade at a multiple between 3 and 5.5 times yearly cash flow, yearly profit before any debt service. So using a simple example, a laundromat nets $100,000. That laundromat's going to trade anywhere from $300,000 to $550,000. Why the variation? I'm going to get into it in a bit. I'm going to get into it in a later slide, why the variation might be, but that's the range that you're looking at. Once an offer is accepted, a buyer is going to conduct due diligence. They're going to do coin counts to verify income. They're going to review the lease, utility reviews, and then, as I mentioned, in California, an escrow is going to be open. Generally speaking, buyers are going to assume an existing lease. All right, so that's a lease we have a whole presentation that Cindy Wolf is going to do on leases. And I'm going to say it here for the first time, and I'll probably say it 5 more times today and another 10 times throughout the whole series. It is the single most important determination of value is a laundromat's lease. All right. And when you take over an existing store, you're going to get their existing lease. There's going to be good things in there. There's going to be bad things in there. But you're going to ultimately assume the previous owner's lease. And then a down payment for buying a laundromat is going to range between 25 and 50%. The newer equipment, the lower the down payment has to be. Lenders like collateral in the laundromat. They like newer equipment, better collateral. All right. And then, as I said, the older the equipment, the larger the down payment, and the shorter the term of the loan are going to be. And sometimes a seller will carry. They can. What a seller carry means is they'll hold a note, just like a lender. They can carry the entire note. That's to say, maybe you put 50% down, and you have a note with the seller for the other 50%. Or sometimes they can carry a partial amount. You put 30, 40% down, a lender does 40 or 50%, and they carry 10 or 20%. Key determining factors in how you value a laundromat: the lease, the equipment, and the location. And I'm going to go into those in detail, but those are the 3 big factors, with the lease being the most important factor. So equipment, that is a factor. Newer the equipment, the better the value, the better the multiple your store might get. When we talk about new equipment, we like to talk about maybe newer than 5 years, 6 years, somewhere in that range. People ask, how long does equipment last in a laundromat? You're looking for somewhere in the 12 to 15 range is kind of that nice place to replace equipment. That's for your washers and your dryers. We call them extractors. Those things that are in this shot here, those are called washer extractors. and we call these tumblers. Those are what, you might think of as dryers. Those last between 12 and 15 years. The little top load washers that you might have in your home that open from the top, those last maybe 5 to 7 years, somewhere in that range. But it really depends on usage, how many turns per day these things are being used, and how well upkept, the equipment is. For those of you who have started to look at laundromats, before today, and you've been looking, you realize, gosh, there's a lot of really old equipment in laundromats. So I say 12 to 15 years. There's laundromats that have equipment that are 30 years old. We'd like to see them replaced. We think there's a lot of reasons why equipment should be replaced, but it's not like after 12 years they just stop working. If you upkeep equipment, they can last longer. The newer equipment, though, the better the multiple you're going to get when you want to sell your store. The bigger the multiple you're going to get when you buy a store. Why? Because buyers don't need they don't need to worry about spending money to replace equipment. If equipment's only 3 years old, they still got a lot of years left before they need to replace equipment. Lenders will loan a higher amount. They'll give you a longer term as well for newer equipment. So that's another reason why you're going to get a premium for newer equipment. And then on most new equipment, the utilities are a lot better. They use a lot less water. That's the big thing. Laundromats use water, electrical, and gas. And washers, particularly of the newer generation, I'd say since 2009, use a lot less water than older washers. And then buyers will get the benefit of better technology. It's a big deal. Some of you on here may be very into technology, some of you not so much. But there's a lot of buyers today getting in the laundromat business who really are interested in technology, being able to do things remotely from their home, being able to own multiple stores where they can, see all of their stores from an app, that kind of thing. And newer equipment has that. Location is a big factor that can increase or decrease value. The safer the neighborhood, the more valuable that laundromat becomes. Buildings that have nice curb appeal, that does create value, just like a home. When a buyer comes in and they look at how a laundromat looks, how a shopping center looks, the nicer it looks, the more kind of emotionally attached they get to it, and that does move the multiple. And then areas close to investors with money. So most places within California, there are investors with money close by, but in New York City, for instance, I said the multiples 3 to 5.5 here in Southern California. You might go to New York and those multiples might be 6 to 7 times actually, because a lot of investors, a lot of money, and that turns up the multiple. And then you got a premium for locations where laundromats cannot be built because of some city ordinances or rents are super high. So I use an example. We, some years ago, remodeled a laundromat in West Hollywood. Very difficult to build a new store in West Hollywood because of how high the rents are. And so, that laundromat, it is about protecting cash flow. That's what you're trying to do. You're trying to buy a cash flow and protect it for as long as you can. This West Hollywood laundromat remodeled. The business did extremely well, had a long-term lease, very cheap rent. And so you go, well, there can't be a new store built most likely because rents in West Hollywood are extremely high. The cash flow is incredible. The equipment was newer because it was remodeled, and the lease is long-term, so you're protecting that cash flow long-term. There are some cities in Santa Ana, for instance. There's what's called a CUP, a conditional use permit that's needed to build a laundromat. So it makes it very difficult to build a laundromat. If you go to San Bernardino, there's an ordinance against building new laundromats. So under most circumstances, very difficult to build. So if you have a laundromat in San Bernardino, there's not going to be a new one built near you, most likely. And in some areas, there's something called a sewer connection fee. When you want to build a new laundromat, the city says, hey, you're going to impact our sewer going forward, because the laundromat, when they disperse water back into the sewer, hey, you need to pay an upfront fee for that. And that might be $2,000, $3,000, $4,000 a washer. So if you're in an area like that and you own a laundromat where building a new laundromat, they charge sewer connection fees, you go, hey, there's probably a good chance a new laundromat's not going to be built. And then the lease. As I said, most important thing, you're protecting a cash flow, and that lease is what is going to kind of make or break you in protecting that cash flow. And so here, the characteristics you're going to look for, and as I said, we're going to have a whole session just on leases, but you're going to look for a long-term lease. This is not like some other businesses where you might think 3 years is a long time or 2 years is a long time. If you're spending more than $300,000 in a laundromat, I want to see that you have at least 10 years on your lease. All right. And a lease is going to be made up of a base term. That's the initial term of the lease. And then options. Options are nice because they're at the benefit of the tenant. They're at the benefit of you as the owner of the laundromat. So you get to decide whether you want to move forward with an option. We call it exercising an option, or you don't. You just want to close up shop and leave, and that's okay too. But we like to see at least 13 years of term between the base term and the option, right? Excuse me, at least 10 years of term is what I said. So maybe you have 8 years left on your lease, but you have 2 5-year options. Great. You could have a total of 18 years left on your lease. We want to see reasonable increases. All right. So if the rent is nice today, that's great. But how's the rent going to be in 5 years or 10 years or 15 years? We want to make sure that not only do you have a protected cash flow, but that if you sell the laundromat, that the new buyer does as well. So you don't want to just have cheap rent for the next year or two and then the rent doubles. You want to see how does that rent look, going forward out 5, 10 years. And then we want to make sure that that lease is easily assignable, that whoever buys the laundromat from you, that it is easy to take them to the landlord and say, hey, landlord, can you approve this person buying? Because we want you to be liquid. We want you to be able to easily sell your laundromat, and easy assignment makes that possible. And then you got to understand the fine print. I'm not even going to go into that. I'm going to let Cindy talk about that in her presentation in the next week. So potential lease issues that could affect value: length of lease. You're buying a cash flow. Laundromat could be netting you $20,000 a month. You only have 1 year left on the lease. You're buying 1 year of cash flow. That's it. So you really need a good length on your lease. You need the assignability restrictions. You need it to be easily assignable, as I mentioned. You want to see that the rents are not above market or that they don't have large rent increases. Generally speaking, what we like to see is the total occupancy cost, the total rent. And rent can be broken up into kind of I'll say there's 2 components of rent. There's the base rent, and then there's something called triple nets. And that stands for it's the taxes and insurance and common area maintenance that a landlord pays. They actually pass it on to the tenant. And so we like to see total occupancy cost, that base rent plus the triple nets, being somewhere below 25% of the total gross of the laundromat. So if you have a laundromat that is grossing $24,000 a month, I'd like to see the rent being below $6,000 a month. All right. So total occupancy costs below 25% of the total gross of the laundromat is what we like to see. I just mentioned that 25% rule. And then we want to know what your rent is going to be long into the future. And so there's a term called fair market value, FMV. You might see that acronym. And that basically says at an option, so you have your base term and then you get into your option, that the landlord might say, I'm going to give you 5 years of lease, an extra option, but it's at fair market value rents. And what that basically means is the rent is a little bit up in the air. There's different types of fair market value, but they're basically going to say, hey, what are rents in the area? And we're going to change the rent to be what the rents in the area are. And it doesn't give you the alternative to that is something called stated rents. Some leases have, what you're paying today and what you're going to pay 20 years from now. Now, I'm not saying a fair market value option is a deal breaker, but we want to understand it. Maybe there's a cap. Maybe it says the landlord can determine what the rent is based on rents in the area, but it can't be more than 10% of what the previous year is. Or there's a lot of different little fine prints that we want to understand. It's not a deal breaker. It can be an okay thing. We just got to understand the fair market value options. So this is the chart I really want to get into, spend a few minutes here, and I know there's a few questions. We'll see if I answer them in this chart. But this is kind of a matrix talking about the multiples in which laundromats sell for and the components or the characteristics that would determine those multiples. So I'm going to start from the top. You have a laundromat selling at a 5 times annual earnings or more. It can be or more. What are the characteristics of that? You're going to have a long-term lease. You're going to have reasonable increases. You're going to have a reasonable base rent and triple nets. Where's the location? It's going to be in a desirable, safe neighborhood where there's a lot of investors close by that want to invest in businesses, and the equipment's going to be newer than 5 years old. All right, that is going to exist. That type of laundromat does exist. Most laundromats that you're going to see, they're going to have some issues. They're going to have some, the equipment's going to be older. The lease isn't quite right. And you, hopefully working with a broker, are going to determine what are you going to give into a little bit. Yes, I understand that the laundromat isn't perfect, but in exchange for that, I'm going to buy it at a cheaper price. And so those are the kinds of things you want to work with an expert kind of working that out. The next tranche of kind of multiples, I'd say 3.5 to 5. What's your lease? It's still a long-term lease. You still need a nice lease there. The neighborhood, it could be a great neighborhood, could be an adequate neighborhood, but the neighborhood's fine. And then the equipment is, maybe it's not brand new, but it's some new, some old. It doesn't have to be completely remodeled. All right. And then the last category, and I say below 3.5 times, you could have a laundromat that's worth negative value, right? The laundromat is losing money every month, or the laundromat has a rental increase that's going to be really big in a year or two, and it's kind of on the border of doing okay. Or a new laundromat's about to open across the street, and you already have a laundromat that's barely hanging on. So there are laundromats I wouldn't take for free, and you got to be careful of that, because you might see, hey, that's a really good deal. It's a big laundromat, and it's only $80,000. That sounds great. It might be great, but it might also be getting you into a situation where you're in a negative cash flow situation, which is obviously something that we don't want. But laundromats that are trading below 3.5 times, you're having short-term lease or maybe high rent or large increases. Maybe the neighborhood's pretty undesirable and the equipment's old. The good operators, and hopefully all of you will become good operators one day, is you are always doing something with your laundromat. You're always improving it. So you have a laundromat. Let's say you buy a brand new one. Let's say one of you, some of you guys buy a brand new laundromat. In 4 years, you're painting the walls. Then 2 years later, you're redoing the ceiling tiles. Then you're replacing your top load washers. Then you're replacing your dryers. All of those things, you're just kind of constantly doing something to your laundromat, because if you don't, you will get it to this 3.5 and below time multiple where it's almost, where do you start? You have a bad lease. You have equipment that's really old. So my recommendation is always be tweaking, always be making improvements to your laundromat. And when you want to make a big improvement, that's the time you ask your landlord, hey, landlord, I have 13 years left on my lease. I'm about to spend $100,000 on improving my washers, but I don't want to do that unless I can get an extra 5 years of options. So it is never too early to be asking your landlord for extra term on the lease. They're not just going to do it because they're nice people, though. They're going to want to see something in exchange. Improve my shopping center, improve the experience in your laundromat, and I'll give you that term. So that's the nice time to ask your landlord to give you additional term. So I said a lot there. I see some questions in the chat. Let me get to those, and then if anybody has any questions they want to speak out, it's *6 to unmute yourself, and we can talk as well. Okay, so let me start from the how do you do coin counts? What is considered existing lease term? How can you figure out how old the equipment is? Okay, all great questions. So what normally happens when you buy a laundromat through PWS and through most brokers is there will be a coin count that is done. One of the questions I always get is, hey, Brad, this is a cash business. How do I know what the owner is reporting is accurate. All right. A few things. Sometimes, rarely, tax returns match to what is on a listing. All right. It doesn't happen a lot. This is a cash business, so people sometimes don't do that. But sometimes that is the case. Think about that if you ultimately own a laundromat. Someone is going to pay you a premium if there's accurate and transparent numbers. So it is not the worst thing to have very accurate and transparent numbers, because buyers really like that. And that's something to strive for. But how do you determine what a laundromat's doing if maybe the books don't match? It's kind of a multitude of things. You're analyzing utility bills, and we run a utility analysis. You're doing a coin count. So what that's going to be is, before we even open escrow, a lot of times, you get an offer and acceptance. We do a coin count that basically you get the key, you clear the coin boxes, and then you will show up with the buyer, with the seller. Sorry, I keep doing that. You will show up with the seller every time they collect. It's going to be probably twice a week they collect, and you're going to show up with the seller, and you're actually going to count the coins every time that they do a collection. You should show up on a Tuesday at 12 p.m. and a Saturday at 1 p.m. and a Wednesday at 9 a.m. And you just want to have a visual of what is going on in that laundromat. Go to the laundromat, do your laundry there, see how many people are coming in. And then lastly, most of the newer machines today, they do have some auditability functions. So you can just say, hey, how much are these machines doing? And you can see it that way. So it's a multitude of things that kind of you piece together and see if it passes the sniff test. That's good enough for some people. Some people say, hey, wait a minute. I want actual numbers. I want to see a tax return that matches. I want to buy a card operated laundromat because I can audit those completely. And that's totally fine, as well. How can you figure out how old equipment is? There are some ways to do that. If you work with anybody who is in this business, they kind of know how to read the serial numbers of equipment to find out the age of the equipment. So if you're trying to do this on your own and you take a picture of a serial number, they're normally on the door, the inside door of the machine. Sometimes they're on the top of the machine or whatnot. You can take a picture and then you can Google how to determine the age of a Speed Queen machine, and it'll tell you there. Question is, I've seen laundromats so close to each other in almost all locations. How do you decide how far competition should be? So great question. And, this depends whether you're buying an existing laundromat or you want to build a brand new laundromat. But when you're buying an existing laundromat, competition's not bad. Competition's not bad any way you slice it. But if you are buying a laundromat and there's already competition, I'd like to see that, because it means it's going to fend off possibly a new laundromat coming into the market. So if there's an area, and if you're starting to look for laundromats now, you're going to realize these things are everywhere. There used to be a map I would pull up that shows little push pins, and it looks like the entire state is covered with push pins. As I said, 4,000 laundromats in the state, and a lot of the state has density. So there's a lot of push pins in Los Angeles, county and whatnot. But I don't mind competition, and I don't mind also when you're buying an existing store, you're buying a cash flow, and sometimes it doesn't matter if there's 5 stores, within a half mile, or no stores within a half mile. What is the cash flow of that laundromat, is what's really important. Now, when you're building a brand new laundromat, it's a little bit different. It's a demographic story, and, you really want to understand the demographics. What do we like? We like high renters. We like high density. And generally, we like a Hispanic population. We like to follow the Hispanic population. So those are the 3 factors that, when we're looking to build new laundromats, that are really kind of things that we really look at. I think that's I think that's all the questions here for now. Is there anything? Yeah, I'm going to stop here with those questions. Any other questions anybody has? Once again, if they want to star 6 to unmute themselves, or any other chats they want to mention.
Hi, Brad. This is Jay. How you doing?
Hey, good.
I got a question regarding, going back when you said like the small, like updates with like paint, ceiling tiles, and stuff like that. I have a location that I've been eyeballing for a while that has, I've been going in, like you said, every other day doing laundry to see how the flow is, and I've seen them take equipment out and just leave it blank, like they didn't replace it with anything. So I would like to know, if I buy this location, there's some machines in there that people have been using for the last 2-3 months that I've been going in there. What do you say? What advice would you give me if that space that they took out those machines, putting newer machines in there, but offering like a card, like the card system for that? Would you say buy the 12 machines, that they fill those 12 machines with card and coin, and then little by little, every 8 months, 9 months, once I start generating more revenue and traffic, start replacing those other machines? Or should I just keep it coin based?
Yeah, so good question, Jay. Totally depends. And what you're, so I talked about a multiple, right? I talked about in terms of what a laundromat sells in a multiple. Most laundromats, we talk in terms of turns per day, how often the machines are being used. And laundromats, they'll be in a range as well, but 3 times on the low end, 3 turns per day, up to the high end. There's stores that turn 12, 13, 14 times a day per washer. And what you're trying to do is you want capacity to be able to handle weekends and nights. And so, during a Tuesday morning, you're not going to have every machine going, that's for sure. But you want to understand, hey, are there capacity issues in those bottleneck times, Saturdays, Sundays, evenings? And so you're overbuilding a laundromat to make sure that you can handle the load of customers during those really busy times. What sometimes gets a little confusing is you walk in a laundromat and half the equipment's out of order, and so it's hard to understand what's needed long term in there. But so Jay, I'd have to kind of see what's going on with that specific laundromat to see whether you should be investing in equipment or investing in a payment system like a card system. But you want to be able to have capacity to be able to handle weekends, and you want to be able to, think about your equipment kind of being used. Can you kind of have it average 4, 5, 6 times a day is kind of what you want to, be averaging. And so, it just depends, I guess is my answer.
Thank you. Appreciate it.
Sure. A couple more questions. Yeah, and there's a comment, keeping your store cleaner is the big deal. So that is such a big deal. Cleanliness. If you end up operating a laundromat, keeping your equipment working and the store clean and safe, right? Who's your customer? A lot of times they're families. Sometimes the mother is coming to do laundry. They want to feel safe and clean. And if they put what I say a lot, laundromats, can inherently be, it can be a dirty thing. You're putting your clothes in a machine that somebody else has put their clothes in thousands of times before you. You want to make the customer feel like it's the first time that machine's ever being used, right? You want to make it feel like they're putting it in equipment that would be at their home, that they're not seeing the dirt and the grime left over from other customers. So it's just very important, the cleanliness and the safety factor when we get into operating laundromats, how important that is. And it seems like such a low bar, but how many laundromats just don't follow those things. So Anna Figueroa, our head of finance, is going to do a whole presentation on financing to laundromats. But generally speaking, when you're looking at the equipment age, over 10 years, you're looking at putting about 50% down, and the term of the loan is going to be less than 5 years. Equipment between 5 and 10 years, you might be putting 40% down, the term between 5 and 7 years. And then if you have equipment that's 5 years or newer, you could put even less down, maybe 30% down, and that term could be over 7 years. And when you add replace equipment, so let's say you buy a store and it's old and run down and tired, but at the time you buy the store, you also commit to adding new equipment, you can transform the loan of that laundry and get cheaper interest rate, longer term, and less down, even though you're buying new equipment, because the lender loves to see that collateral in the store. They love to see people making investments in the store. So, just know that the newer the equipment correlates to a better, better loan out there. And then, I've seen some questions and I held off on answering them in the chat just because of accuracy and transparency. So this is the big thing. A listing is only as good as it is accurate, right? So you might see a listing from somebody, a for sale by owner or another broker, and you're, oh my, this is only at a 3 multiple, and I'm seeing another laundromat at a 5 multiple. Why would I buy? Why wouldn't I just buy that 3 multiple? Well, let's say everything else, is equal. It's all about the transparency of the numbers, and so you really need to make sure that the numbers are accurate before you're making any other decisions. And, that's part of what a broker does. They're going to make sure that the numbers are accurate. If you're really good and you've done this before and you can work with a for sale by owner and get accurate numbers, great. But that's kind of how brokers kind of insert themselves here and make sure everything's transparent. So, things you might look at, does the owner handle any attendant responsibilities? You might see a listing and it says labor is $100 a month or $1,000 a month. And every time you go in that laundromat, someone's working the laundromat. So we want to see an owner's responsibility is to collect the laundromat and maybe manage the attendance and the marketing responsibilities and whatnot. But if they're actually working the store themselves, they need to be included in the labor factor, in a listing. Does the owner collect the machine income or the money deposited? So basically, the true way to understand collections of a laundromat are someone collects all the change in the coin boxes, right? They're going to go to each, I want you guys to imagine owning a laundromat. Here's what you're going to do for a coin laundry store. You're going to go to your washers. You're going to open the coin box. You're going to dump the change in a bucket or a bag, and you're going to do that. And then you're going to weigh all your change. You're going to weigh it, and it's going to convert the weight of the coins to a dollar amount. And so you might collect on a Friday before a busy weekend, and you're going to say, okay, I collected $3,000 of change from my coin boxes. You dump the quarters in the changer. You take the cash and you leave the store. The cash you deposit in the bank is not actually your true collections. Your true collections are the coins that were deposited in the coin boxes. All right. So you just got to understand, some owners just count the cash, but you actually want to weigh the coin and understand what comes out of the machines. Do the collections match the tax return? That's rare, but it definitely does happen sometimes. And does the owner accurately keep track of machine maintenance and building maintenance costs and those kinds of things? So, you just want a busy store, older equipment. It's going to have repairs on it. It's going to have labor repairs on it. It's going to have parts repairs on it, that kind of thing. So just really understanding, is an owner giving you the accurate information on the expense side of things? Surprisingly enough, although most people are always concerned, is the income being reported properly? And I understand why that's a concern. The expenses are really where I think most sellers don't accurately portray what is going on in the laundromat. They forget to include the one-time expenses. They forget to include, a lot of different factors. And so I'm actually more concerned. I want to make sure that the top line income is accurate, but I feel like that can be done, pretty actually somewhat easily by looking at a few different factors. But the expenses, that's an area where you really want to make sure that those expenses, are accurate. So a bulletproof laundromat, which is not necessarily, it's not that you have to buy a bulletproof laundromat, but this is what it would look like. It's working with a knowledgeable broker. It's buying a store with accurate income and expense numbers. It's getting a long-term reasonable lease, and then it has new equipment or is in a desirable neighborhood. Now take one step back of that. I many times can recommend somebody purchase a laundromat if it is a good location, has a good lease. I don't need the laundry to have new equipment or a good operator, right? Like, we like to see opportunities, and some of you may be interested in remodeling laundromats. I want to buy that old tired store that I can buy for value. We love that. We love that. You got to make sure that it's a good location. You got to make sure that rejuvenating the laundromat is going to make sense, that you shouldn't just let this thing die. And you got to make sure that there's a good lease. But just because a laundromat has bad equipment or the previous man or woman that operated was not a good operator, those are not deterrents to buying a laundromat. Those are deterrents for paying a premium for a laundromat. Those are deterrents for overpaying for a laundromat. But if you can find a deal where there's a good lease, good location, bad equipment, love that. We have a lot of operators who are interested in that formula. All right. Before I go to the next, there's a chat here. What does PWS as a broker vet the laundromat that they're looking to sell? So, okay, so when someone lists their store with PWS, we are getting income records, we're getting tax returns, we're getting utility bills, we're getting all expenses, we're getting not just employee sort of the owner just saying I pay $2,000 in employees. We want to know who the employees are, what their schedule is, whether they're paid properly or not. And so we're trying to understand, we have a service department here. We have a parts department. We're understanding, are you doing your service or parts through us? All right, then we know what kind of money you're spending on parts.
He keeps calling me. You don't
parts
call him back. He's emailed you. Nobody can reach him.
I will call him back. Look,
I'm going to mute everybody. Sorry about that.
Okay, about these canine,
Sorry about that, guys. So if you want to unmute yourself, just press the *6. So we're taking all those inputs in, and then we are, asking questions where there needs to be. We're taking the lease. We're reviewing the lease before we actually put the listing together. And then we will put the listing together, and then the owner needs to sign off on the listing that they've provided accurate numbers as well. Good question there, though. Okay, so I'm going to show you a listing example, and I'm actually going to show you what I'll call a bulletproof listing. And I will talk about some of the things that could make it not a bulletproof listing, but I want to show you kind of something that's got everything going for it, and then we'll have a discussion from there. So let me do a new share here. Okay, we'll start with this one. So I'll zoom in here. This is a laundromat in Northern California. This was sold a couple of years ago, and here's what you're looking at. This is a typical listing you'd see from us or from another broker, and it's going to give you the address. Here it is in the upper left-hand corner. It's going to give you the square footage. It's going to give you the hours that the laundry's open. It's going to give you the year it was owned since, what the previous owner has owned it since. And then there's lease information. Here's what the lease is. Right here, you can see. I'll zoom in even further so we can see this. The rent and what we call those triple nets per square foot. So this is $1.69 per square foot for rent and CAM, which is a reasonable amount, pretty pretty low amount, particularly in Northern California. You're going to see the rent increases. Annual CPI, which stands for Consumer Price Index, which is a index that talks about sort of inflation and what pricing, what the Consumer Price Index, what goods should have increased at over the last year. And so it's either CPI, but it's got a 1.5% minimum and a 3% maximum. And CPI normally falls within that range, but you know that this laundromat, the rent is at most going to increase by 3% per year. The lease expires in 2025. So this was a year or two ago. So it had 5 years left. I'll just kind of say that on its base term. But the laundromat had 4 5-year options. So this laundromat has a total of 25 years left of term. And it has in the option period, the same rental increases as before, 1.5% minimum, 3% maximum with CPI. So for the next 25 years that this laundromat, what the rent's going to be essentially. It's going to increase every year by 1.5% or 3%, somewhere in that range. And that you have 25 years left of lease. That's really important because this laundromat is netting $20,000 a month, $21,000 a month. Now, you want to protect this cash flow. How is this cash flow protected? You have a long-term lease. You have equipment that's relatively new. It's newer than 5 years old. I'll show you. Here's the equipment here. The equipment is 2015. So, it's relatively new. You don't need to replace that for a while. And then as I look down the expense side, we talked about the rent already. Here's the utilities. The utilities run about 22% of the total income. That's in range. Utilities normally are in sort of mid to high teens to like mid 20s, depending on the utility district it's in and the efficiency of the machines. And you have all the expenses here. You have trash, you have insurance, personal property tax. There's that common area maintenance, that those triple nets that we talked about, vending expense, payroll taxes. These are under parts warranty, so there's only a parts labor, not a actual parts expense because they're under warranty. The attendant expense, $5,000 a month. That seems reasonable to fully attend a laundromat that's doing this kind of income. There's phone, there's advertising, there's a manager's salary. There's actually a manager that works here as well that does collections and whatnot. And then this store happened to have a credit card system. We're going to get into payment systems as well. And it has a credit card system where people can pay with coin or credit card. So this laundromat kind of has a lot going for it. I'd say the thing this laundromat that it's the downside is that it's relatively small for a store that does this much income. It's 2,500 square feet. So people, really getting a premium, people like to see a little bit larger of a store. There's only so much income that a 2,500 square foot store can do. And this is about as much as you'll see. The store is doing $45,000 in total income. It's washers and dryers are combined in this example, but they do $37,000. There's vending and there's fluff and fold as well. So that would be the one kind of knock on this. So what you're going to see as you guys all look at laundromats is, a laundromat like this comes along and you can see if the numbers are accurate, and that's, discussion with the broker and you guys kind of understanding what an accurate laundromat looks like. Hey, the laundromat's doing $40,000. A store needs to be fully attended if a laundromat's doing that kind of income. A laundromat's doing wash and fold. They need to have attendants there. That if the attendant number was $1,000 a month, that would raise a red flag. So you're having an accurate number. You're in a desirable neighborhood. This is in Northern California. That laundromat's going to sell at a premium. But, for me, it depends what kind of buyer you are. We have a lot of different buyers here, but you might be okay getting a 18% return on your money to know that you're going to have a stream of cash flow that is very well protected long into the future. That's a high cash flow that you could afford to have a manager in place or that kind of thing. Or maybe you're the kind of buyer that says, I want to look for the value. I want to look for the rundown store that I can remodel. And that's totally fine. We just want to make sure that you have a lease in place, that you're paying the right price for that store. And those stores can be absolutely tremendous as well. But what you're going to see when you look at listings, and I just wanted to show you kind of in the form, is you're going to end up noticing little knocks here and there. You're going to say, hey, this thing is really nice. The rent is good, but gosh, the lease only has 8 years left. That's it. Or you're going to go, this is a really good store. I like the area, but the equipment is actually pretty old. And it's going to be you guys kind of learning the nuances of this business, and then also working with an expert, I would say, to say, all right, I know the store is pretty good, but how am I going to either buy it right or make asks to the landlord or the seller to make it really, really good? What am I going to do to remodel it to make it really, really good? And so, you know, that's going to be the kind of the art here of trying to find the right opportunity that fits for you and making it, you know, a really great, really great. So I see a couple questions here in chat, and then I'll open it up as well. So I think I answered both of them. The reason dryers, there's a question, why are dryer revenue zero? The way this owner collected was from just collected all the equipment at once and then dumped it into the coin changer. What a lot of operators do, what I'd say most operators do, they'll actually collect, they'll collect their 30-pound washers, and then they'll weigh that coin, and they'll understand what's coming from their 30-pounders, and then they'll do their 60-pounders, and they'll break it up like that. Some will just do collections. They'll just weigh everything at once, and then they'll, put them back in the coin changers. There's a question, should you avoid laundromats next to liquor stores? Like, each laundromat's going to have their own personality. And there are some, that are in a great neighborhood shopping center next to a grocery anchored, shopping center, some freestanding, some next to a 7-Eleven, and they all have their pros and cons. You definitely want to have a safe environment. So you want to try to buy a laundromat that's in that can provide a safe, clean environment to those patrons. And if there's a liquor store that's causing problems, you either want to figure out a way to beat that, or you might want to look for another opportunity. But I wouldn't say it's a deal breaker, 100%. So that's what I wanted to present today. We've gone about an hour and 15, and I am totally open if anybody has any questions about this or anything else, and happy to open it up. *6 to unmute yourself if there's any questions. Going once, going twice. Okay. All right. So if I didn't get to your question, you can just email me directly. I'm happy to answer you. And then I will send out a calendar invite right after this for our Thursday session. And then at the end of the week, I will send out the recording of both today's session and Thursday's session. And if there's anything that comes to mind between now and then or anytime, feel free to email me, give me a call, and I'm happy to answer. So thanks for this, and I will see you guys on Thursday. Take care, everybody.